Hey guys, it's Jordan with Cashflow AI, and in this video, we're going to talk about cheap option strategies I've used to grow multiple small accounts. In fact, this one I grew from 2,300 to 10K in 4 weeks. This one was $200 to 2,300 in 1 week. I did $87 and 4,000 in 1 month, $500 and 2,200 in 10 days. And the last one I did was $947 and 9 grand in simply 3 weeks. We're going to break down the exact strategies in this video. Let's dive in. So the main strategy I use to grow these accounts is what I call an iron butterfly. Now there's call butterflies and there's puts butterflies. I'm going to show you some examples of them in this video, actually dive into the charts, the options chain, show you everything. But the call butterfly basic is very, very simple. All you're doing is you're selling 2 calls at the same strike price, right? So 2 calls at the money, and then you're going to buy 1 call below it, and then you're also going to buy 1 call above it. Okay, that's it. And what you're actually going to get is a very small debit. So a lot of these trades can end up costing you $10, $5, $20 simply with 1 contract. And some of them $30 to $80. However, they have incredible risk rewards. You can make $50, $450, 9x potentials. There's a lot that you can do with them. All right, so we got SPY pulled up on an options chain here. I'm going to show you a real example of kind of what a trade will look like. Now, this is SPY on a 30-minute chart. So let's just say, for example, we are trading SPY. We kind of see we're in this range where we keep going, down and up, kind of like this channel support resistance. It's very clear that we're kind of going, down, up, etc. And so my thought process may say, hey, I believe by the end of the day today, price is going to end down at this lower kind of support area, or it kind of follow within this trend. So let's say we believe that SPY is going to be around 670, right around here, okay? So what I can do is set up a trade where, let's say we're looking at, and again, we're going to do this on the put side because I gave you a call example, but we want to look at the put side here. So let's say we're selling the 670, okay? So we're going to sell 2 options there. So what I'm going to do is actually just up the quantity like that to 2, okay? And then what we're going to do is buy 1 put below it, 669, and actually we're going to put that down to 1 quantity. Sorry, let me fix this here. Bring this down to 1, like so. And then we're going to buy 1 671 put right above it. Okay, so we kind of just nest it, right? We have these like 2 puts that we're selling, and we're simply buying 1 right above it and then buying 1 right below it. We're kind of nesting it all together, okay? And you can see right here, our max loss is $8. Our max profit is $92. Right? And if I look at the quick analysis, you can see we're risking now it's changed to $6 to make $94. And that's where the risk reward comes into play. You can risk so little and make so much. It's a very cheap trade to put on. Quick interruption, simply telling you to go subscribe below. I've been trading 8 years. I'm giving away all my tips, tools into this exact channel. We're going to start posting almost every day on this channel, going over everything I've learned in the past 8 years as traders. So go ahead, subscribe, back in the video. And you can see here, in order for us to profit, you see if the price of SPY went to being greater than 669, so what we're just going to do is draw this out, 669 right there. And then if we go back and less than 670.92, which would be 670.92 right there, as long as price stays in between the zone, we have an opportunity of getting that max profit of $94. Now, are we going to get that exact $94? Probably not. Is there a chance? Yes, of course. But we need price to be pretty much right at 670 when the market closes today for us to reach that. However, if price comes down and we close somewhere around the 670.5 or 669.5 or anywhere within this kind of range, in fact, I can even draw this in. We can kind of call this our profit zone here. As long as price stays or closes within this profit zone, we're going to be profitable. And again, this is only us risking $8, $7 a trade, right? It's incredible risk rewards. And if you get this to a point where you can kind of, up the quantity on all of these, right? Now, at this point, we're only risking what? $50 to make $658. That's a pretty good freaking bet. And again, that's if we're at max profit. Even if we kind of come towards the top here, towards the bottom, we could still end up with a $200 profit, $100, $300 profit. It all depends on where exactly it closes. However, the standard for the strategy is extremely simple, right? By being able to sell the puts right here and then buy 1 right above it, right below it, we're kind of expecting price to stay within this range. And if it does, we're going to have a max profit. So another simplified example, if we're looking at a SPY example, let's say we're at the 575 strike, we're selling 2 of the calls at 680, we're buying one below it at 920, and then we're buying one above it at 580. And what we're going to have is a net debit of $30. So it only costs us $30 to put on this trade. And our max loss, our max risk is $30, but our max profit is $470. So you can get these massive risk rewards simply by doing these call butterfly examples. Now, why are these the best strategies and why have these allowed me to grow these so consistently? Is because not only am I using a strategy that has an edge behind it, but because the risk rewards extremely well. And the most important part about all of this is that time decay actually works in your favor in your expiration. So if you have a good estimate on where you believe price is going to be when contracts expire, so typically at the end of each day or end of each week, you can capitalize on that and make a huge profit with very little risk. Now, the other strategy I used to grow this account was just simply buying basic far out the money calls and puts, okay? And the reason for this is because if you catch a move correctly, you can have a huge risk reward similar to the butterflies. All right, so let's say we're looking at Tesla as an example here. And so Tesla right now is kind of in this 440 range. This is a 1 hour chart. So for the past few weeks or so, it's kind of been stuck in this range of 420 to 450. So what we can infer is say, hey, I believe, that Tesla is in some sort of flag, whether you call it a bull flag, bear flag, consolidation, it doesn't matter. I believe there's going to be a massive move on Tesla, whether it's up or down, I don't really know, but I believe there's going to be a massive move. So what I can do is say, okay, well, I believe there's going to be a massive move and Tesla spikes up. We're probably going to hit this like 460 range, right? And if Tesla kind of dumps down and breaks below this flag, we're kind of going to be around this 410 range or lower. That's kind of my thoughts, right? So my probability, my edge with this strategy is that, okay, I believe price is going to move up above 460 or down below 410, right? And we can give that a time frame of 1 week. So let's say this is Tesla, we're 1 week out. And so what we can do is we can simply buy the 410 put, right? And we can buy the 460 460 call. And so that's going to leave us with a $729 trade. Now, that's a little expensive, right? We're looking for cheap options here. We don't want to risk $700 on a trade. So what we can do is actually turn this into a spread. And what we can do is we can sell the 462.5 call right above it, and then we can sell the 407.5 put right below it, right? And so now you can see, if we look at the quick analysis, our max loss is only $80, but our max profit is $167. And so how do we actually end up profiting? Well, if price of Tesla ends up winding greater than 409, which is essentially right at that 410, right? Less than 409, right? So less than this 409 level here, or greater than this 460 level, which is, again, pretty much that strike that we bought right there at 460, our maximum possible profit is $167, right? So if we expect that there's going to be a big move in Tesla, and maybe we're not exactly sure what range it's going to be in, we can still profit off that exact strategy simply by placing a bet on volatility. So we're in this flag, we can put on this trade right now, and if price breaks out by the end of next week, we close above this 460, 461 area or below this 409 area, we're going to walk away with a very cheap bet, making a lot of money. So $82 to 168, it's about a 2 risk reward. It's not crazy high compared to the iron butterflies. However, it's still a very good bet that you can place, and especially on these moves like Tesla, Apple, AMD, that have these crazy kind of one directional moves, if you catch it in the right time, you can make a lot of profits. And as a quick comparison, you can see that if we do an example on like a SPY butterfly, we're risking $50 to make 450. That's obviously a very high profit. Now the win probability is going to be lower. I know it says medium here, but this should be way lower, typically around 10, 15%, depending on the type of trade that you're playing. Again, you can kind of set these up however you want to. So if you want to risk like $200 to make 300, kind of lower that risk reward, but still have the opportunity to have a higher win rate, you can do so. Or you could try and get this even way better, risk $5 to make $495, and then you can make, essentially a lot more, but your win rate's going to go down. If you're ever using like a broken wing butterfly or something of that nature, you can typically get different credits. And that's going to allow you to have, like I said, a higher win rate, although a lower risk reward. And then if you're getting far out the money options, your typical cost is going to be very cheap. Again, your win probability is very low because not only are you playing against direction, but you're also playing against time. And when you have both of those against you, it's pretty hard to come up with consistent profits. However, you can have some very big wins. So unearned butterflies typically going to have higher probability to find profit. If you're getting far out the money options, typically going to have lower probability, lower upside, and both can potentially 10x your money. Again, this is not financial advice. However, if you are able to find a strategy that helps you predict where prices are going to go, you can capitalize on that and make a lot of profits. So I hope you guys did enjoy this video. Leave a like, comment down below. Please subscribe if you haven't, and I'll see you all in the next video.